Intel stock investors have suffered through extremely poor performance over the recent 5 years for the semiconductor design and manufacturing company, despite the fact that the semiconductor industry overall has performed excellently, with companies like Taiwan Semiconductor experiencing phenomenal gains and design companies like NVIDIA soaring over the recent few years. So a lot of investors are hoping that there's a mean reversion here and Intel catches up with its peers. And if you're kicking the tires around for Intel and trying to decide if you should buy Intel stock, I'm going to discuss two things that you really need to know about Intel in the latest developments, specifically as it relates to Intel's position in the accelerated computing industry, the data centers that are being developed, optimized for AI, how Intel's positioned for that with its latest GPU, and the progress of its Foundry business. So let's dig deeper on these two things that are critical for Intel stock investors to know about.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in talking about the data centers for AI, Intel says that their focus is squarely on delivering powerful AI systems that provide enterprise customers with greater choice and flexibility, optimal performance per watt, and lower total cost of ownership. Intel recently launched its latest line of products, and it's hoping to gain some market share in that industry, recover, I should say, some market share, because NVIDIA is capturing a lot of market share that Intel dominated 5, 6, 7 years ago. Remember, data centers previously were primarily focused on, or were primarily built on, CPUs, which Intel has an advantage in, versus nowadays these newer data centers optimized for AI are primarily based on GPUs, which NVIDIA has a strong competitive advantage on, given the software solutions it provides along with the GPUs and hardware it provides enterprise customers. So Intel said that in its most recently completed quarter, they launched their Gaudi 3 AI accelerator, which is the GPU to rival NVIDIA's GPU in the space. And this delivers twice the networking bandwidth and 1.5 times the memory of its predecessor for large language model efficiency. And much of the use case, not all of the use case for these data centers optimized for AI have been for large language models, training the large language models, and then operating the large language models. This isn't 100% what these AI data centers are being used for. Some of them are being used for instance, recommender systems like the kind you see in YouTube, which recommends the content for you to watch. That's also a valuable use case. The overall uptake of Intel's Gaudi has been slower than we anticipated, as adoption rates were impacted by the product transition from 2 to 3 and software ease of use. As a result, we will not achieve our target of $500 million in revenue for Gaudi in 2024. That's very disappointing to hear for Intel stock investors that were hoping that its GPU would gain steam here in this market. Now, another company that's also launching and has launched a rival to NVIDIA in this space is AMD. And AMD had the opposite to say to investors. They said that the uptake of their latest GPU for this market is much better than expected. And they raised their target forecast for how much revenue they expect to achieve from their product in the market this year. And so it's really disappointing again from Intel, yet another disappointing product launch from this company that's had several fails in recent years. And I'm especially disappointed. I've had Intel stock rated as a buy. I've had high hopes for Intel recovering and benefiting from all of its investments in technology, research and development, manufacturing expansion that are slower to materialize. Still, the company did provide solid progress in its recent quarter. Investors were pleased with the progress it made. This was just one data point that was not as good as was expected. So moving on to the second thing I talked about, which was Intel Foundry. This is a key part of their strategy, returning to process leadership through disciplined execution. They've spent tens of billions of dollars on this foundry expansion and research and development to catch up to the latest technology. So Intel 18A, which is their fifth node in 4 years, is healthy and continues to progress well at this stage in the development process. They have had some big wins for the Intel Foundry business, including Amazon Web Services, which is the biggest hyperscaler cloud computing business in the world. In addition to them, they added 2 additional 18A wafer design wins this quarter from compute-centric companies, and their pipeline of potential wafer designs has grown nicely quarter over quarter. So that was a great data point to offset the bad data point we got with the Gaudi product launch. They were also awarded an additional $3 billion in direct funding under the Secure Enclave program to produce leading-edge semiconductors for the US government. And this has been one of the reasons why Intel invested so aggressively in the manufacturing expansion, in the manufacturing technology development, is because they are getting subsidies from the US government in the form of billions of dollars of grants, like this one, $3 billion here as a grant. And they're also getting several billions of dollars in low-cost loans that might be written off in the future. A lot of the times when the US government makes a loan to a company that it wants to see succeed, 6 or 7 years later, they might say, oh, by the way, you don't have to pay us back for that. They'll initially say it's a loan so that citizens won't be so upset that the US government is giving money to favoring one company or one industry. And then later on, when there's less attention, they might just write that off and say, well, you don't have to pay us back for that. Or they might say, we'll give you an extra 5 years to pay us back, or lower the interest rates, whatever the case might be, because the US really wants Intel to succeed. It's strategically important. The importance of semiconductors and advanced semiconductors have become even more important because of the increasing effectiveness of artificial intelligence. And Intel is one of the last remaining US semiconductor manufacturing companies. We still have a big share of the worldwide semiconductor design revenue, but the US is falling behind in terms of semiconductor manufacturing revenue. That's going overseas, a lot of which going to Taiwan for TSMC, Taiwan Semiconductor Manufacturing Company, which has won a lot of market share in recent years and continues to dominate the industry. So the US wants to see some of that manufacturing come back to its shores, and it's helping that by granting billions of dollars to companies like Intel. And so if you're curious about Intel, that's something that warrants attention. Is the reason why they're investing so much is because of these subsidies and because of the lower cost of capital for these expansions as a result of support from the US government. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.